Hey, in this video, I'm going to break down the fundamentals of Gateway Jacks in Pearl Square. We're going to look at what is actively under construction, what is slated next, and the real investor upside, downside, and the specific zip codes that these projects will affect. There's going to be no hype, no fluff, just a clear investor's viewpoint. Let's just first establish what actually is. Gateway Jacks is transforming a 9-block radius in downtown North Core area. This is not a single building infill project. It is a massive planned urban ecosystem covering nearly roughly 2 million square feet of development, over 1,250 residential units, and 200 square feet of retail. The major player behind this is a development partnership involving Brian Mull, who've led transformative urban major projects like Water Street in Tampa and the National Landing near DC. So alongside JWB and DLP Capital. The other major player is the city of Jacksonville and the downtown investment authorities themselves. Because we all know urban redevelopment of this scale really pencils out on private capital alone. The city and the DIA have several programs to help projects pencil out. For phase 1, the city has already approved a massive 99 million public-private incentive package. But as investors, you need to break down the support into two completely different buckets: REV grants and completion grants. The REV grant, this is a tax rebate model. Developer pays their property taxes upfront and the city cuts a check back to them for a percentage of the incremental increase in the property's value over a fixed term. For investors, this is a low risk. If the project succeeds and value raises, the developer gets paid. If it fails, the city is in out of pocket. Now, the cash completion grant, this is the high stakes piece. Unlike a tax rebate, a completion grant is a direct cash payout from the city's general fund. Once a building is substantially finished, Gateway Jacks will secure 39 million in completion grants for phase 1. So here's the friction point. Right now, there is a major political pushback in the city council. 25 million cash completion grant is currently on the table to fund the crucial Block N7 tower, the one meant to house the new Publix. City lawmakers are openly divided, arguing that writing a multi-million-dollar cash check from the general fund is unsustainable. Incoming city council leadership is asking, do we have the money? They're already trying to negotiate away from the cash payout. Floating alternates like structuring a city loan or swapping the cash for deep future tax discounts. As the underwriter, here's your takeaway. If the city and Gateway Jacks can't agree on a restructured deal, or if the November tax vote forces the city to pull out, the financing gap could stall future phases entirely. Watch the structure of these votes, not just the approval. If the city keeps backing these projects, things move forward. If the incentive money becomes political or delayed, timelines should stall. As a investor, we have to keep one eye on the construction crane and the other on City Hall. Unlike previous downtown promises, there is real dirt moving right now. There are 4 key projects actively shaping this district. Vendiver is a 7-story mixed-use building delivering 205 apartments and 22,000 square feet of ground floor retail. It is on track to begin residential leasing right now in the August to September timeframe. This is our first true test for downtown residential demand. The next one is Beaver Street, a 286-unit mixed-use apartment project with its integrated retail and parking. As you can say, one building is a project, 2 or 3 buildings can create an actual district. The other one right now is Pearl Garage, the mobilization of former First Baptist Lighthouse Garage. Gateway Jacks is converting the ground floor into active retail and residential space. An actively parking structure is crucial for removing the dead zones that actually kill urban walkability. And also the Hotel Maribel, the historic adaptive reuse of the old Ambassador Hotel into a 109-room boutique hotel under Marriott's Tribute portfolio. This will test whether the core can attract consistent business travel and hospitality dollars. What's coming next? The ultimate catalyst for the entire district hinges on one major signature tenant, the downtown Publix at 119 West Beaver Street. Gateway Jacks is moving ahead with demolition. The ultimate catalyst for the entire district hinges on one major signature tenant, the downtown Publix at 119 West Beaver Street. Gateway Jacks is moving ahead with demolizing the old First Baptist Auditorium to clear way for a 14-story tower featuring 285 apartment building directly on top of a 35,000 square feet full-service Publix and pharmacy. As you know, a grocery store is the heartbeat of a neighborhood. It is fundamentally going to change the psychology of downtown living, moving it away from a place people just visit for work or a jazz game into a functional place where people can actually live. However, as noted with the completion grant friction in the city council, we have to watch this timeline carefully. If the publics get delayed, the lease-up momentum of the surrounding apartments will slow down. Beyond retail, the future pipeline includes 655 Pearl, a planned 6-story boutique office building offering 100,000 square feet of space, and 220 Beaver, which was recently acquired and is slated for a sale condominium. Condos are a lagging indicator. Renters will usually test a new urban market long before buyers commit to their capital. Now let's take a look at the grand scheme for downtown. If Pearl Square is an isolated island, it would fail, but it isn't. It's a strategic link for a series of mega projects that, if executed together, will create an entirely new closed-loop economic ecosystem for downtown. Right now, downtown Jax is deeply fragmented, each pocket operating on a single-use timeline. The stadium district fills up for 8 hours on a game day, then it goes dark. The Brooklyn sees heavy professional foot traffic from 9 to 5, then clears out. The North Core has historically been a ghost town. The new thesis is about creating connected demand, a continuous 18-hour loop where different demographics passes the economic baton to each other throughout the day. The daytime catalyst is going to be the UF graduate campus, just a short walk from Pearl Square. The University of Florida is moving forward with its downtown graduate campus. This is not a commuter school. It is a high-density tech, medical, and business hub. It's going to inject thousands of graduate students, faculty, and researchers into the core during the day. They're going to need coffee, quick casual lunch spots, and close proximity to housing. The daily life anchor, Pearl Square and Publix, this is where these students, along with Brooklyn corporate workforce, shift their spending after hours. Public Square's 1,250 residential units provide the baseline density, and the opening of the new Aldi and Market and Union, combined with the planned Pearl Square Publix, solves the grocery problem. It captures the daily grocery runs, gym membership, and restaurant spending of the peoples brought by the UF and the corporate core. The nightlife and weekend anchor is the $1.4 billion stadium renovation and shipyard. The Jaguar Stadium overhaul and the incoming Four Seasons resort solves the entertainment problem. They'll draw in regional tourism, concert goers, and high net worth visitors. Substantial retail growth requires revenue 18 hours a day. Pearl Square serves as the vital residential and logistical anchor, unifying Brooklyn's workforce, Lavella's academic talent, and the stadiums, districts, entertainment into a walkable hub. So here's the investor's upside. If these micro theses is hit and these pieces successfully connect, the upside for the local real estate investor is massive. Premium retail demand successfully executed will establish downtown as a highly desirable urban core, driving up rental comps for any renovated multifamily or single-family asset nearby. The commercial ripple effect will increase residential density, naturally attract service-based retail, coffee shops, fitness boutiques, and casual dinings, which dramatically improves the neighborhood's sentiment. Now let's talk about what can go wrong, because this is where investors get crushed. Supply absorption shock. Pearl Square is introducing a massive wave of inventory all at once. If hundreds of premium units hit the market faster than the tenant bases grow, landlords will be forced to offer heavy rent concessions, putting downward pressure on older asset classes nearby. The retail lag. Rooftops come first, retail follows. If apartments open but ground floor retail spaces sit vacant for 12 to 24 months, the area will feel isolated after 5 p.m., dampening rental retention. Another one is street level safety and perception. Buildings don't solve safety concerns, activity does. If the walking corridors between Pearl Square, the Stadium District, and Brooklyn remains dark, disconnected, or poorly maintained, the entire district growth will be capped out. The hype premium. We can all agree to this. This is the number one mistake in Jacksonville right now. Speculators see a rendering and immediately pays tomorrow's projected prices using today's non-existent income. You cannot underwrite a deal, assuming a property is worth more just because it's 5 blocks away from a future Publix. Your deal needs cash flow based on current market reality. If you're running screens for investment properties, you need to underwrite block by block. But these are the target zone. 32202, the core area, ground zero. This is where the direct impact will be felt quickest, particularly along the North Core and Villa borders. 32204, Brooklyn and Riverside edges, a highly liquid rental market that will strengthen as it connects more seamlessly to North Bank. 32206, Springfield and Cathedral Hill. High character and immense opportunity, but incredibly speculative. One street is good, next street is bad. Do not buy blindly by the zip code here. 32207, South Bank in St. Marcos already possesses a strong and institutional and medical employment base. It will benefit greatly from the overall riverfront park connectivity. 32209 and 32254, the speculative west edges, offer cheap entry points, but requires extreme caution regarding crime rates, tenant profiles, and real exit strategies. And what investors should track. If you're an investor watching Pearl Square, here are the exact matrix I would monitor. Vendor lease up speed. How fast do these fill up this fall? Rent concessions. Are they getting full list price or are they giving away 2 months of rent free to mask weak demand? The public's demolition and funding vote. Does the city council passes the N7 incentives package by September or does it get delayed? Foot traffic after 6 p.m. Does the curbless Festival Street design actually feel like an 18-hour environment or does it empty out? Nearby sales comps. Are regional properties prices moving up because of real underlying cash flows or are undereducated buyers driving up prices purely on rendering hype? My take. The take-home message is simple. Pearl Square is incredibly strong fundamental signal for Jacksonville. Use mega developments to validate your long-term exit strategy. Never use them to bail out a deal that doesn't make financial sense today. If you're looking for a deal nearby, make sure it cash flows on today's rent, today's heavy insurance premiums, and today's tax numbers. If you want more data-driven breakdown of Jacksonville's shifting submarket, hit a follow. Let me know if in the comments if you want the next video to deep dive into the shipyards and stadium district or the South Banks. Thank you.